So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. The banana zone starts. This is the banana zone in the box. We then have a corrective period. Look at this. Corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2. Banana zone phase 2. Banana zone phase 2. Then we have another corrective zone.
Is the banana zone already over? That's what a lot of investors are starting to wonder as Bitcoin loses steam. Just weeks ago, the mood was full of optimism. Bitcoin had pushed through key resistance levels, and Powell's idea of an explosive growth phase, the banana zone, seemed to be playing out. But with recent price swings and sharp corrections, that confidence is beginning to fade. Instead of the non-stop rally many were expecting, Bitcoin has been stuck in a messy, unpredictable stretch. Altcoins have taken even harder hits, and some are now questioning whether Powell's call was too optimistic. If we were really in the banana zone, critics argue, crypto prices should be climbing steadily, not stalling out and dropping. Skeptics claim that Powell may have overlooked real challenges like economic headwinds, tighter liquidity, and fading investor confidence. But Raoul Pal isn't backing down. In his latest update, he pushes back against the criticism and stands by his original view. He says the banana zone was never meant to be one smooth vertical move. Instead, it comes in waves, strong uptrends followed by pullbacks that shake out weaker hands. These corrections, he explains, are not a sign that the cycle is broken. They're a normal part of how bull markets unfold. Make sure to stick around until the end of the video as Raoul Pal breaks down why this pullback might be part of the bigger setup and what could be coming next for Bitcoin and crypto. Also guys, if you want to stay ahead in the crypto world, I send out a free 5-minute daily newsletter covering expert predictions, on-chain data breakdowns, and breaking news. Click the first link in the description, enter your email, and join 50,000 plus others in becoming a smarter crypto investor today. Now here's Raoul Pal with his latest outlook.
Because this is what happened in 2017. It played out again. There we had 1, 2, 3, 4, 5 30% corrections. In fact, many of them were almost 40%. I don't remember this. Well, I do remember the one in June, July, because I sold out at about 2,000 in that one. But generally speaking, you don't remember this stuff. Because in the end, the gains compound. So it's really important to zoom out and realize volatility is part of the story. It is how you get the impressive gains. You can't have them without the volatility. Volatility is what keeps leverage in check, keeps the market healthy. So it's very healthy market right now. When we go back to 2017, January, like now, came out of the gate, collapsed. Why? Because financial conditions had tightened. And then it went up, recorrected, and didn't get going until mid-March. Where are we now? Mid-March. Guess what's likely to happen? Number go up. What happened that time? It fucking went up. Big time. It went up 23x. It will not do that again this time. But the point being, it's all to play for. And we will get massive volatility in the middle, and you won't believe it, and you think it's going to be topping, and every FinTwit moron will be telling you it's topping. It won't be. We've got plenty to play for. Bitcoin, 14-day RSI, double bottom oversold. Okay, every time that happens, goes up. Sometimes it has this sideways consolidation period, then goes up. Will we have more sideways consolidation? This chart's maybe out of date by a week. For sure. Will it go up? For sure. Are we anywhere near a top? Here's our GMI Cycle Finder top that we use for exponential age asset management. XPAM, my digital asset fund management business, it's a fund of crypto hedge funds. We use this as one of the key inputs into what we're doing and how we allocate to funds. We're fucking nowhere near. NASDAQ, let's talk about equities. You guys are nervous Nellies. This is like one of the most bearish ever readings in the history of the NASDAQ. oh my God, Trump and Scott Bessent and tariffs, and they're all going to make us die. And you guys, stop. You are all way too bearish. The percentage of stocks trading with a RSI of less than 30 is almost record territory. And guess what? Global M2, because the everything code drives everything, drives NASDAQ too. And you guys trying to sell the NASDAQ here are selling something that is perfectly priced for liquidity. And we've had these liquidity air pockets in the past. Liquidity air pocket is when liquidity is not rising, NASDAQ overshoots, it recorrects, comes back down to trend, and then follows liquidity. Remember, NASDAQ has a 97.5% correlation to global total liquidity, which is the index that we use on a broader basis. 97.5%. Bitcoin has an 89% correlation with global liquidity. Global liquidity, I wrote about this in GMI, and there's probably not much time to talk about it now, but is my preferred measure these days. If we go back to the early phase of the Everything Code, the balance sheet was the main thing. After the balance sheet use, we started using Fed net liquidity. Once people understood that the balance sheet was printing of money and debasement, they started moving to Fed net liquidity. Now, all of FinSwit understands Fed net liquidity, as does crypto Twitter. And so they're looking at the TGA and the reverse repo and all of this stuff. Meanwhile, the game has moved. The game is always moving, my friends. The game has moved to total liquidity in the US and everywhere around the world. Total liquidity includes M2. It includes net liquidity at every single major economy level, net liquidity, plus M2. And M2's largest driver is the dollar. That is what they're now doing, which means that they're pushing the monetary policy onto the balance sheet of the banks themselves.
Raoul Pal has consistently said that Bitcoin's path is closely tied to the global money supply, and so far, the data supports that. Historically, Bitcoin has moved in near lockstep with global liquidity, right alongside the NASDAQ. Even with recent price pullbacks, that bigger liquidity backdrop is still holding up. Central banks might not be actively printing money right now, but government spending, credit growth, and expanding bank balance sheets are still creating an environment where capital needs somewhere to go. As currencies lose value, more and more investors are turning to Bitcoin and other hard assets. That said, it's not all smooth sailing. Right now, the market is in what Pal calls a liquidity air pocket, a temporary slowdown where money isn't leaving the system. But it's also not growing quickly. These pauses can cause price corrections and shake investor confidence. But Pal believes these dips are part of the process. They help cool off speculation and clear out excessive risk before the next leg up. So what happens next? If past cycles are any guide, we may be close to the next phase of strong price movement. The Bitcoin chart is showing some of the same early signs that have come before major rallies. And on the macro side, expectations for interest rate cuts later this year suggest that liquidity could start improving again. That's why Pal isn't worried. In his view, the banana zone hasn't ended. It's just going through one of its normal resets before the next surge. Now let's go back to Raoul Pal as he continues his discussion.
Total global liquidity is the big one. M2, very useful number because it's a large part of it. Okay. NASDAQ and financial conditions, way overshot. Financial conditions are going higher with a 6-month lead. NASDAQ, undershot. I would not be surprised if it bounces. NASDAQ, all of you, there's so many people on Twitter who just hate technology. They hate the fact that the number goes up over the time. They hate the fact that there's a bunch of large companies who make money. They want it to be about small companies. They want it to be about value investing. It ain't so. This is the largest observable trend of our lifetimes, is the log regression channel in the NASDAQ. Get over it. We're here to make money, not fucking be a justice warrior. And here we are in the sort of correction phase that we get often in the NASDAQ to drive the type of returns that we get. That's 17, 18% a year returns from the NASDAQ, and you get larger returns. Other thing, we just had a massive move in the dollar. Bitcoin versus the dollar. Every time you have a massive move, Bitcoin goes sharply higher. Okay, so I think you're getting the point. So the common refrain I get on X is, oh, look, Raoul, he's the banana boy. So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. And those of you who expect number go up all the time are only remembering what the banana zone is at certain periods of time. Your number's not going up because you own a bunch of shit alts and you're like complaining. Okay, I get it. Let's go through this again for you morons out there. The banana zone starts. This is the banana zone in the box. We then have a corrective period. Look at this. Corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2. Banana zone phase 2. Banana zone phase 2. Then we have another corrective zone. And you're all going to be throwing your toys out the pram. It's all over. It's just like 2021 again. Blah, 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 blah. And guess what? We will correct and it will go higher again. That's how the banana zone works. And you guys have to learn patience. I know I say this all the time.
In other news, market analyst Timothy Peterson says the current Bitcoin bear market, defined by a 20% drop from the all-time high, is nothing to panic about. According to him, this decline is relatively mild compared to past corrections and is likely to last only 90 days. Drawing from historical patterns, he notes that Bitcoin typically experiences a bear market once a year, and only 4 previous ones have been more severe in terms of duration. Peterson doesn't expect Bitcoin to fall far below the $50,000 level, pointing to strong adoption trends as support. At the same time, he says it's unlikely that Bitcoin will break beneath $80,000 either, suggesting the current correction is more about timing than deep structural weakness. He predicts a possible slide in the next 30 days, followed by a rally of 20 to 40% after mid-April, which he believes could bring hesitant investors back into the market. This comes as broader fears over a prolonged trade war rattle investor confidence. Following new tariffs announced by President Trump and retaliatory measures from trade partners, capital has been flowing out of risk-on assets like crypto. The once bullish sentiment is clearly cooling. Glassnode's hot supply metric, which tracks short-term Bitcoin holders, has dropped significantly from 5.9% during the November rally to just 2.3% now. Nansen analyst Nikolai Sondergaard believes the crypto market could remain under pressure until at least April, when global trade talks might ease the tariff situation. Meanwhile, recent data from CryptoQuant suggests that most retail investors are already fully exposed to Bitcoin, dampening hopes of a major influx of new capital anytime soon. Altogether, the trade war has cast doubt on Bitcoin's status as a safe haven, as it continues to fall in step with other risk assets during periods of economic tension. Still, with adoption trends holding strong and historical patterns pointing to a rebound, many believe the groundwork is already being laid for Bitcoin's next big move. Remember, if you want guidance through cryptocurrency's exciting but sometimes unpredictable world, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.